When looking at planning your estate, life insurance can play a major role beyond just providing funds to your beneficiaries when you pass. Joining us to explain more is Paul Lindsey of MacMillan Estate Planning. Thanks for joining us.
Pleasure. Thank you, Jennifer.
So, Paul, perhaps you could start by outlining some of the advantages of using life insurance as part of your estate planning.
Yeah, absolutely. Life insurance has been around since ancient Rome, and it's one of those estate planning tools that really has great application for everyone, irrespective of perhaps their net worth or their circumstances. Now, we do find many people, they use it to perhaps replace an income if someone passes away. So if we think about the typical example of a couple with children, well, in the absence of a life insurance policy, if one of the spouses was to pass away, losing that income could have a significant impact on the ongoing stability of the family. Now, beyond that, we can use insurance to provide value, or cash rather, to pay debts, taxes, or even just to put a bit of an injection into the estate to provide a legacy. For some, they will use it as part of their sorry, Jennifer.
Yeah, no, go ahead. Sorry.
Yeah, no, I was going to make the point that I've been talking about the personal piece, but people use it in their business as well. So that if we have a director or a partner who dies, their death doesn't affect the ongoing continuity of the business. The insurance can be used to sort of buy out their share. And perhaps, Jennifer, the most pertinent point I'd like to make is that the death benefit under a life insurance policy is always tax-free.
Okay, yeah, very good points to make note of. So what does the insurance policy look like? Are there different types that are available?
Yeah, most definitely. And I suppose in terms of what it looks like, it depends on what the individual's objectives are for it, perhaps the amount of coverage they need or the amount of premium that they can afford to pay. But it's also worth noting that life insurance does get more expensive as we get older. Of course, you know, for those of us that are no longer 25, it is more expensive than in our youth, perhaps. But that doesn't mean that it's not still a really useful tool in the design of our estate plan. Now, many people will be familiar with things like term insurance, which is quite common for those that have mortgages. And the idea is that we have this insurance that subsists for a defined term, and we just have that reassurance that if we kick the bucket during the term of our mortgage, the life insurance will be there to repay any balance. But from an estate planning perspective, we find that people are more looking at things like permanent life insurance, and there the clue's very much in the title. This is insurance that's permanent. It's there for your entire life. And again, many families, they use a bit of a variant on this called the joint last to die, which, you know, typically means that we have spouses, and when they both pass, that's when the death benefit is paid tax-free to their family.
Okay, well, that's a lot to take in, but so important. Now, you mentioned previously that people use insurance as a way for their families to pay estate tax. Are there any other tax benefits to life insurance people should consider?
There are. I mean, as we've just been talking about, and as you mentioned there, we have this ability to provide a tax-free death benefit, but there's also some really creative ways that we can use life insurance to mitigate tax. Now, what I mean by that is we can use a life insurance contract to shelter up to a quarter of our overall net worth. And the idea is that we contribute that value to the policy. That value then becomes sheltered and it grows tax-free. Now, unlike most insurance where we pay our premiums and, quite frankly, it's not us that will ever see a benefit, with this style of insurance planning, we retain complete access to the value that we've deposited, plus the growth. And of course, we can then use that to supplement retirement, for one-off purchases and so on. And again, that's not just something we can use personally. We could use that within our business to significantly reduce the tax that we will pay, or our estate will pay, when we pass.
Well, thank you so much for your time today and explaining all of this, because it is very important and something people should or might want to consider. That's Paul Lindsey joining us from MacMillan Estate Planning. Thank you.
Thank you.